G'day there. Welcome to the Alpha Wave Trader week ahead market update. I'm Murray Dawes, and we are going to quickly go through an idea which is a really great way of analysing trends as they develop and how they shift, and where to look for, support zones as the market does sort of turn around on a shorter term basis, using the longer term charts to sort of create the different levels of support and resistance that you'll encounter, which can help you with creating targets on your trades. So just a quick recap on where we're at with the S&P. Now, we've been going through this over the last month or so, and if you haven't seen any of these before, you should go and have a look. I think, search for my name on the website, and you should be able to find the past videos. But where we're at, I'll just do a very quick recap. This is the quarterly chart on the S&P. I look for the buy and sell pivots, which is when a trend is occurring. I'm looking for the close below the highest candle. So as we're going along in the trend, I'm looking for those weak candles when the market fails to carry on and gives a sense that the selling pressure is strong enough to close below the highest candle. And you can see I've just picked out all of those for you, and you should know all of this. I'm just recapping it very quickly. Giving you a good sense of when the trend is shifting, that's actually a buy pivot here, which didn't get picked up by the program, and also there. Understanding what the most recent buy and sell pivot is incredibly important. And we have a situation here where we've got the quarterly sell pivot in place, and the market is rallying up into the guts of that quarterly pivot. And so just on the theory, it is that usually the opportunity, if we are going to turn back down, the best opportunity is often up in the guts of that pivot candle, and this actually applies across a lot of different time scales. So as this market rallies up, I've got the sell zone there and the midpoint of that candle, and also the buy zone of that candle. And the buy and sell zones based on 75 to 87.5%, and that's around 12.5 to 25% as a key zone. So they're my sort of key support and resistance zones within waves and trends. So you can see here with that whole wave to the upside from 2016, I've also got the sell zone, midpoint, and buy zone of that, giving us key levels. So you can see as this market rallies, if we just look at it from the point of view of this whole rally from 2016, we've had a retest of the midpoint, which you can see there, that blue little line there. Now it's rallying up into the sell zone of that whole wave. So if the selling pressure is around, it should find resistance up here and should at least have a bit of a retest, and you'd expect it to even just get back to maybe the buy zone of that quarterly pivot. And if the buying pressure is still around, yes, we could take off to the upside, but in the meantime you should have a lot of time to put on a trade and get free carried to see whether the selling pressure can actually really return. And if we bust below these lows, we're going to have a quick trip to that buy zone of the whole wave, which is down at 2100. So it's pretty exciting times. So that's the very big picture overview of where the market's at. We're rallying up into what should be very stiff resistance. But once you've made that decision that you're looking for these opportunities, you do have to constantly monitor the support and resistance zones around the market in the short term, because obviously it needs to battle through all of those before it can turn back down again. And that's what I wanted to talk about today. And the concept that we need to talk about is of the key bars within trends. And this will be, it is a great little thing to help you to understand where the buy and support, where the support and resistance zones are coming in and why, and also to look for really great opportunities within trends, but also to help you to identify those shifts in trend as well. So as a market is trading higher, and this is using the quarterly, but I'll be showing you the weekly in a second to show you where we're at right now. You'll see, let's say once this quarterly buy pivot came in here, if we just focus on the bars from that point forward where there is a close above the high of the previous key bar. So the first key bar being that buy pivot which came in there. So we've got a close above, the high of that lowest candle. There's your buy pivot. So that is the key bar for us. Then once we get a close above it on that bar, we'll say that's the second key bar here. And then we've got a third key bar, a close above the high. Now we need it to close above that high. Therefore that is another key bar here. So it needs to close above the high of that bar. So that is not a key bar. That's not a key bar. But once it closes above the high of that bar, there's your key bar there. There's another key bar, another key bar. That's not a key bar. There's a key bar there. That's a key bar. So all of this, not key bars. And we could stop it there because there's your sell pivot on the quarterly. So if we just analyze that whole rally from this key bar to the sell pivot, nearly 4 years later, and you look at each key bar as a range, a key range, or the distribution as I call it, where the market looks to decide whether it's going to break below the low of the range or close above the high of the range. And I've chatted before about how these distributions play out. Just very quickly, as a recap, we'll have and that'll be good enough, I think. When you have a reaction in a market which is trending, so it's trending to the upside, and you get that large reaction which creates a range, I'll then look at the midpoint of that range as a point of control, POC. So you get a lot of trading happens around that point of control, and then all of this trading is the attempt to decide whether it's going to break away from the market to the upside or to the downside. And so you get a series of false breaks of the edge of the range. You can see there. Oh, that's a terrible little line, but I want to get through this quickly. Where the market will attempt to break away from the range, but the gravitational pull pretty much of that point of control sucks the market back. So people try to buy it, getting long, shorts cover their positions, but then there's no follow through, and it will tend to revisit that point of control over and over, and then to the downside as well. And there's a relationship, within the range and how it trades. And I've given you those support and resistance zones where of that major range, if I just do it large, so if that was the initial range, and we have this big widening distribution that occurs from that point of control, I look at the buy and sell zone within the range. So if that's the extremity of the range, I'm looking at the buy and sell zone within that range as an internal support and resistance, but then also 25% outside, and the 0.5 0.618 outside the range becomes support and resistance as well. So if we have a look at a live example of this process, we've got the S&P here. This is a weekly chart. We have the trend to the upside. We have the large reaction. I have the buy and sell zones in there, which I've shown you all of this before, but this is just to quickly give you the outline. We have the buy and sell zone, which you see the market reversed at many times within this weekly chart, finding support and resistance around that buy and sell zone, but also that 25% outside and the 0.618 outside. You can see the sell-off that we saw at the end of last year, finding support bang on that 0.618 outside the range, and now the market has whipped back to that point of control, which is the midpoint. So from the point of view of what I just wanted to talk about today, it was a long-winded way of showing you this, but I just want to make sure you understand that. This is how markets sort of trade in trying to decide whether they're going to go up or down. Now, if we take this concept of how these distributions form and apply it to the concept of the key bars, which I was showing you, you can start to understand where these support and resistance zones come in. And this is what I just wanted to show you quickly right now. So this is a close-up of the weekly of the E-mini S&P 500. And we're going to look at, this whole rally and sell-off based on this concept of the key bars and distributions and how they form and play out. So if we look at, this is April last year, you can see down here from this rally, if we look at where the buy pivot came in, you can see that's the buy pivot here. So if we look at it from the point of view of key bars, we can say there's our first key bar. It needs to close above that high to be the second, so there's our second key bar. Needs to close above, there's our third one there. There's our fourth one there. Needs to close above that high. Probably fifth one there, sixth one there, seventh one there, and eighth one there before plummeting. And then we can go across and look at the key bars to the downside. There's your first one there, second one there, third one there, fourth one there. Now, if we then apply the rules of how these distributions form, and we look across, and I bring in the range to show you, and we look at the price action that occurs after those key bars are formed, you can start to see some pretty interesting developments. If we look at this key bar, the first key bar in the rally, you can see selling off to the 75%, which is the buy zone of that key bar, and then shooting to the upside. If we then look at the next key bar, this next key bar, we see prices going up to the 25% above and being rejected, coming through to the buy zone, then finding support to the point of control, failing to the 618 below, where it found support before blasting off to the upside. Now, when we look at that key bar, you can see that it did actually have a sell pivot. So even though we've got this key bar and I've given you all those levels, there was a sell pivot that was created there. So there was a short-term sort of downtrend happening, which you could follow, and this sell-off here would have been from the midpoint of that sell pivot candle, but there was still support at the 618 below the most recent key bar up, and that's an important point. Then we've got the next key bar, and just to make this all quick, you can work this out yourself. Bouncing off the midpoint, got the next key bar up, and you can see it found support near the bottom of that key bar. So imagine if you were buying around the buy zone of that key bar, you'd be doing pretty well. Also rejected from the 0.25 above, you can see there, before selling off. Then on the next key bar, it ended up just rallying. So this is when it can really have a strong rally. It can just only come back to the 0.25 before taking off, not giving you much of a chance. But then on this key bar here, you can see, if we just give you those levels quickly, you can see quite clearly selling off to the 0.25 below before blasting off to the upside. And if we have a look at where we are right now, you can see we got the buy pivot there, which shifted momentum. New key bar there, finding support at the midpoint. Another key bar here, finding support around the midpoint again. And we've got a new key bar last week. So as we look at this market, saying there's lots of resistance, and we have to watch out, that the market can turn down here. To analyze it, all you have to do is look at these key bars, and I can quickly look at that previous key bar here, and if we look at that up close, you can see last week finding resistance at the 0.25 above, which is where it sold off from. But on the way down, if we turn down, we can now look at the midpoint of that key bar as potential support, the buy zone of that key bar as the next level that the market would need to get through, and if the rally was to continue, it can hit that buy zone and take off to the upside. So if you're getting short, this is where you would create targets, to the area where you think it could find support, and then you've got the level 0.25 below where the market could also sell off to before bouncing. So we'll wait to see whether we get a weekly sell pivot this week by closing below the low of that highest candle last week. And if we do, it could be a pretty bad one, because there's so much resistance, major resistance around this level. But we now have a way of analyzing where we should expect the market to find support, and how that will look, so that you can create targets on the way down if you were to get short in this very key resistance zone. So hopefully that all makes sense and helps you in your own analysis. Cheers.